Hello dear traders, welcome to IFC Markets. You are watching weekly market overview by IFC Markets. Let's start. Last week the USD continued declining against all major currencies. The Japanese yen gained most, having accumulated a considerable correction potential and having strengthened by 3.7%. The Australian dollar has regained 2%. The European currencies have shown more modest growth. The franc rose by 1.7%. The pound and the euro gained 1.1%. The dollar index fell by 1.5%, reaching 4-month lows. The Bank of Japan kept parameters of its monetary policy unchanged after a meeting last week. Almost zero rates, monetary base growth of 60 to 70 trillion yen a year, and an enormous amount of asset purchases form the most aggressive policy among central banks of the developed world. Meanwhile, after rising to the value of 103.72, the dollar yen dropped to 94.00, threatening an important Fibonacci level of 61.8% for September-May rally. In our view, the current correction is a good opportunity for long positions recovery. Even if the downward movement continues, we do not expect the pair to fall below support at 90.40, Fibonacci level 50%. As we predicted in the previous weekly market overview, the Australian dollar managed to recover some ground against the greenback. After falling to a 33-month low of 0.9324, we have observed a correction above 0.9600. The Australian dollar gained support after labour market data reading. Unemployment rate dropped to 5.5%. Technical indicators warned about possible correction as well. The European currencies felt confident last week. The euro and the British pound rose versus the dollar to 4-month highs. Thus, signs of overbought markets are beginning to emerge, and trading is performed near important resistances indicated by Fibonacci levels of 38.2%. This week we expect a lot of major events, some of which are able to determine short-term performance of the whole market. On Tuesday, we expect May inflation data from the UK and the US. Markets expect some growth in the previous month, and if so, there will be less room for the central banks to act. On Wednesday, Bank of England policy meeting minutes will be published and will take place the most expected event, the meeting of the Federal Open Market Committee, followed by a press conference by Mr. Bernanke. On Thursday, the Eurozone June PMI data will be released, and on Friday, the figures for May inflation in Canada. Let us turn to indicators of market sentiment. According to the data of Commodity Futures Trading Commission, the 6 major currencies kept speculative net short positions in relation to the US dollar. However, at the end of last week, the volume of these positions decreased in almost all currencies. And of course, we cannot avoid mentioning a sharp reduction of the net short position on the euro. Such a trend has been observed for the second week in a row and warns us against the opening strategic short positions on the euro dollar, although in the medium term we tend to expect dollar strengthening. The volume of short positions on the British pound has reduced as well, but not as sharply as in case of the euro. The recent macroeconomic data from the United Kingdom was relatively good. Meanwhile, the pair pound-dollar managed to form a reversal pattern over the past 2-3 months. As a conclusion, a rally to 1.62 is possible. How soon it will happen and how confident the movement will be, we can find out this week. Let's wait for consumer prices reading on Tuesday and Bank of England meeting minutes on Wednesday. For us, a break of resistance at 1.5760 may become a confirmation of growth prospects. It was weekly market overview by IFC Market. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Bye!